can we talk a little bit about preferreds in the market? And yeah, would love to hear your thoughts.
Well, so I mean, the leading preferred is STRC, which is a really fascinating instrument. For people who don't know, corporations can have multiple different kinds of securities. They can have bonds that are just debt instruments. They can have convertible bonds that can convert into shares. They can have common stock, which is just the stock that most of us own. And then there's this unique streak called preferred equity. Where preferred equity sits is it's above the common in the event that the company goes bankrupt. So you pay off your debts and then you distribute the proceeds first to the bondholders, then convert holders, then preferred. But what's really unique is that they can pay income, they can pay distributions. So with STRC specifically, it's paying about an 11.5% annual yield. And then what MicroStrategy does is it raises or lowers that yield in an effort to keep the preferred price at $100. So what we've seen even during this massive drawdown is that the preferred stock has stayed right around $100, and the people have been getting 11.5% yield. And it's mostly tax-free because it's technically a return of capital. They're able to offset losses. The risk you're taking with something like STRC is that MicroStrategy effectively is deciding what the yield is. So they could make the yield more, they can make the yield less. Theoretically, they could not pay a yield at all. The reason you're betting they won't take that last option is that it would be a huge reputational damage to the firm. So that's the risk you're taking. But the benefit is you're getting like a really hefty tax deferred yield. 11.5% is hard to come by, and they've been doing a very good job. I suspect that the interest in STRC and copycats of that will be really significant for the next 12 months or so.